almost there. All right, 3, 2, 1.
All right, I'm Josh,
I'm Riki.
and welcome
To
to
the
the briefing
briefing
room.
room.
So today we're here to get some knowledge from some of the goats in the industry. This is actually a very important day for us because this is episode 1 of hopefully many of
Correct.
the briefing room, where we get together with some of the, like I said, goats in the industry. We bring in some of the industry knowledge that everybody's kind of hoping to get, especially surrounding the coronavirus and social distancing in the housing market, etc. So I want to take a second to introduce the first person, Tony Baroni, somebody I've looked up to for a long time in this industry. He is, one of the greatest. He's done a lot. I've been watching him for a while. He's with Keller Williams. And so, Tony, if you don't mind, give us kind of a little bit of your background, your length in the industry, and some of your volume numbers.
Yeah, absolutely. Thanks for having me. I love being first. So congratulations on your first episode here.
Thank you.
Yeah, so Tony Baroni, Keller Williams Realty, been in real estate since 2005. Grew my business through the worst market in history, and leads up to now. We have 15 people on our team, and we have very much have specialized with a lot of specialists on our team. We're on track to do around 300 units this year, and last year we did over 200 and about 60 million in volume.
That's incredible, man.
That's
Yeah.
incredible.
And like I said, I've learned a lot from you, and we're super excited to have you on. And I think we also have a couple of other people. We've got Marc here.
Yep, Marc Moran. He's our branch leader down here in the Brandon office with Movement Mortgage. Marc, if you want to go ahead and introduce yourself, talk a little bit about how long you've been in the industry, and maybe a couple of things that most people don't really know.
Throw me for a loop there. Well, thanks for having me, guys. I appreciate it. Yes, Marc Moran. I'm the branch leader of Movement's Brandon office. I've been in the mortgage industry for 15 years, all of it spent here in Tampa Bay. And I'll give you a little knowledge. Before that, I was in the news business for a decade.
Oh, wow.
So the screen is actually, this is nothing for you. Being on camera and being in front of people, you kind of like this, huh?
Old hat, right?
That's right.
Yeah, and then last but certainly not least, we have Patrick Turner, probably the greatest market leader to be with Movement. Patrick, man. I mean, if you want to go ahead and talk a little bit about about you and how long you've been in the business and how long you've been with Movement.
Yeah, man, I've been in the business, I think it's somewhere around 16, 17 years. Dove in with a broker and I taught myself how to swim. Joined SunTrust in 2005 and became a branch manager in 2009, area manager in 2013, came to Movement December 2017, and it's been a good ride. So just like Tony, I think Marc and Tony and I, we both have, all three of us, grew our business during a very, very rough time. And so I think we're pretty adaptable right now. We know what's going on.
Yes, it's actually one of the main reasons we put the three of you together. As you can tell, everybody kind of started around the same time they came through, and Riki and I are also, what we would consider rookies in our industry, and we're foreseeing this potentially as, our 07, so hopefully we can learn from you guys. We can make it through the potential slowdown that we may go through. And so obviously, as you can see, we're super excited. We're surrounded by some, intense industry knowledge. And so I just want to hop right in. So obviously the elephant in the room is the COVID-19, aka coronavirus. So, we've heard it all from the crazy conspiracy theorists to, the doomsday preppers who bought 948 rolls of toilet paper on the first day, right? So, Tony, I'm really curious, what's your take on this current situation?
I feel like I'm at home, with growing my business through the down market last time, and I describe it as kind of getting in my seat. I'm in my couch right now, and I'm at my desk, but getting your lazy boy per se, and finding my sweet spot to be able to take market share. Because the bottom line is, I'm going to show up every day. My team's going to show up every day. We're going to do what we need to do. We're going to change with the times and find the market of opportunity always. And some of that is just good old fashioned customer service and taking care of people and staying innovative at all times and relevant in the industry. So I think my biggest weapon is never thinking I've ever arrived, and ultimately, just showing up every day is kind of half the battle, in my opinion. So it's comfortable territory for me right now, and I'm doing a lot of research. We've completely transitioned our team to Zoom, so they're actually on another icon on my computer right now, where our whole team's there, where we're celebrating things as we go. We're keeping the office environment within Zoom, and that's something we haven't done before. So I'm going to be interested to see what happens with the changes, the positive changes to our industry with innovation, with technology. So that's pretty cool to watch.
Yeah, absolutely.
Absolutely. Well, kind of tie into talking about capturing the market share and stuff like that. Like, I mean, Mark, what are your personal thoughts about how to what do you think? What's your thoughts about like being able to capture the same business, and being able to see like where the industry's going to go?
Well, I think that the key here is that the housing market was very strong, just like the economy before coronavirus, and they're going to come out of this strong, maybe stronger. So in the middle, we're going to have to make some adjustments here and adapt, kind of like what Tony said. I was thinking that how the consumer has changed over the last 15 years, and most people start their home buying and mortgage process online now. So, this gives us an opportunity to adapt, look for new ways to connect with our partners and our clients, and may come out of here even better.
Yeah, absolutely. I actually heard a video yesterday that was released by one of the prominent brokers out here, and he is very much in agreement with you. He was saying that the people who are pre-approved are still buying, and so that's what you're still seeing. The orders are still coming through, and personally, I feel like it's going to be a kink in a hose. I think we're just going to kink the hose a little bit. The pressure is going to build up on the backside, and when it opens up, you'll get a little surge in the market for all the people who have been at home and been searching, the limited inventory we do have right now. So, whereas before maybe you had 5 people searching this one house, well, now the inventory search has, closed down so much. I think you'll have 10 people looking at that one house. So hopefully, when all this, blows over per se, we will get that surge in the market and we'll be even stronger than we were prior. That's, I think, all of our hopes moving forward.
Mm-hmm. I agree. Well, so Patrick, like, you get to oversee a pretty large market share of LOs, and obviously, us at Movement, we've done a couple of changes to adapt to the current market situation. But like, what are you seeing that's like a common ground amongst other LOs? Like, what are they doing to adapt, or what are they doing to help just stay going forward?
Well, I just want to pile on something what Tony said, and that was showing up. And showing up is just one thing, but showing up intentionally, serving our market, knowing that what we do for a living is crucial for our economy. And we all have to remember what we're going through right now is one thing. It's called a virus, okay? And once that virus is taken care of, everybody's going to go back to Disney World. Okay, people are going to go out. People are going to go and go to restaurants again and have dinner nights, family nights, and things like that. This is not 2008, 2009. There's no real estate bubble to be burst to begin with. Okay, we have a solid real estate market. We have a solid real estate foundation. Lending is strong. Yes, there are some changes going on with lending right now, but that's due to risk. Because as we heard today, unemployment rate did spike up. But again, stimulus was approved. Okay, so there is relief coming to those individuals and those businesses. But I will say, everybody, calm down, right? Keep calm. Buy real estate. We're good. This is a different housing, different times, and this is all short term. So again, I think right now with our team, I'm doing this. I'm telling the same thing that Tony's saying, and it's showing up. Be intentional. How can we serve and help our communities? Let's keep calm. Let's do our part with social distancing. Let's have these Zoom calls. Let's have a 5 p.m. Zoom call happy hour, right? Let's have some fun, because right now it's stressful. It's stressful for everybody. It's not the normal. Home life is a little different, and there's silver lining there too. I'm able to see my children more than I ever have the last 2 weeks. But it's stressful, especially when we're going through times that we are right now, trying to get work done, trying to serve the market that we work in, and also still have that honeydew list, right? That we get hit up with at 10:30 a.m.
Yeah.
Honey, I'm working, right? But so it's a little bit challenging, but we have to adapt, and we will overcome.
Right.
Yeah, it's the American way, right? I think that goes right on board with what Tony said and what Mark said. So, Tony, personally, I wanted to ask you, touch a little bit on what you personally think is going to happen in the market after this blows over. Do you also believe there may be a surge? Do you think that, it may take some time for everything to come back to normal? Or, do you think that once this thing is blown over and we're clear, the market's going to pop off again?
Yeah, I think there's going to be a lull in the market 30, 60, 90 days out. My goal for our team is to make that as the least amount possible, right? So we don't want a gigantic shift from our own business, right? So we have around 60 contracts now combined, listing buyer side. And, I think 30, 60, 90, I'm seeing leads slow down a little bit. We're still getting multiple offers, believe it or not, on our listings. Even yesterday, we had multi-offers on a new listing. So, it's not like that's not happening. It's not like no one's looking at houses. I know our buyers team have shifted to virtual showings, and we are kind of used to that because we do lots of relocations. So we're kind of used to doing a walkthrough on FaceTime. So that's not really anything different for us. We've shifted our listing appointments to online, where we pull up Zoom together and we walk through the house with the seller. We go over a listing presentation. Actually, we have it on video, so we just send it to them, ask them to watch it. And then we go over pricing together and answer all their questions. And we're taking listings like that. And we've done that in the past, not a lot, but that may be something that may be more convenient for the sellers in the future. And maybe more people will shift to that in the future as well.
I would have to agree. I mean, that sounds a lot more convenient, by doing everything virtual that way.
Yeah, and I think it's important because all of us are in the real estate space, right? And so I'm title, obviously we have lender and market leader and realtor, and so the relationship side of the business is very important to all of us, right? Whether it's my relationship with my realtors and my lenders, or the lenders and realtors relationship with their consumers, it's how we stay relevant, it's how we stay in front of them, it's how we pretty much do everything we do. It's based off of the relationships that we're building throughout our sphere, not our farm area, right? So, I think we've come to the time where it's, we're going to transition into social distancing. Right? I think that's the term that we've kind of coined. I'd never heard of social distancing prior to this. So this is something new. I had to Google what the heck that even meant when it came out. I was like, what is that? And so, I want to know from Patrick, if you don't mind, as far as social distancing goes, tell us your outtake on what that means and what you've done to help your lenders prepare to social distance themselves, but also stay on top of their clients.
Yeah. So kind of going back to what I said before, it's just giving them the equipment and the tools that they need to stay at home. We were asked by our government officials to stay at home, work from home if you can, 6 feet of separation. But and I believe as Americans, we follow that. And coronavirus is serious. It has doubled. I think every 2 days or something like that. The cases have been wild. So that's what we can do for ourselves and for our communities and for our country, is to separate ourselves, not trying to just take a vacation for 2-3 weeks. We have a job to do. There's over 6 trillion refinance opportunities out there, and people need to lower their payments. People need to do a debt consolidation. People need to do a cash out and pad their savings accounts, because right now cash is king. It can help people get through these tough times. So being available for our clients, our realtor partners, or any other COI referral partners is crucial for us right now. We're here to serve, and we have to make sure, I have to make sure that our loan officers and our operation partners have the tools necessary at their homes to conduct business on a daily basis.
Absolutely.
Yeah. And Mark, to kind of piggyback on Patrick, I mean, what's your personal take on the social distancing?
Well, we have to do it. I mean, we've been asked to do it, and it's going to be the best way to get out of this as quickly as possible. And that's the whole point. We all make sacrifices here for the greater good, and with the goal of moving on quickly and everybody recovering, and having getting back to the healthy economy and healthy housing market. And right now, I think the best thing we can do is we work together. We're all in this together. We're all in the same industry. We all care about our clients. We want to help them. We want to help them with home ownership, because that's a great piece of their financial puzzle. And with historically low rates, it's less expensive home ownership is. So let's take advantage of that opportunity and help those people.
Yeah, I want to drill in a little bit on that, Mark. So, you said historically low rates. I know that, everybody, there's been so much going on with rates, right? Where all of a sudden your every Joe person is now a mortgage extraordinaire. And so if you could debunk debunk some of the things that are going around, right? So bench rates are 0%. Does that mean I can then go get a mortgage at 0%?
No, you're getting technical on me. So that got a lot of calls that Monday. Hey, I want a 0% mortgage rate. And that is not the case. That is the rate at which banks are able to lend to each other so that they can stay solvent and make sure that we have a secure banking system. And of course, that helps stabilize the economy. There has been it's been a wild ride with interest rates. We've seen some of the lowest rates I've seen in 15 years, and a couple days later or a couple hours later, we've seen them spike. So I think the key is that we just be that advisor for our clients and really focus back on the basics, whether they're refinancing or buying. We want to make sure that monthly payment is comfortable, that it allows them to live their lives, that allows them to save, both for everyday hiccups, but also for their retirement. So as long as we keep that goal in mind, we're going to be helping.
Yeah, absolutely. I love how you said that. And so, so there you go, guys, for all of my, mortgage extraordinaires walking the streets telling everybody they can go, call their lender. You can get a 0% interest rate. That's not the case. If you have more questions, please call Mark or call Patrick. They'd love to help you. And so
wait a second. So I've been calling my clients, telling them you could get 0 interest rates. Is that not accurate, guys? Is that
I think just about everybody is.
That's why Tony's had so many offers put in on his properties, is getting everybody these 0% rates. Let us know who
I'll
your
have to
lender
call
is.
them all back.
Yeah,
I'll call them all back.
So
just have them. I do call us, Tony. We'll take care of them.
Yeah, it's
I would be. Hey,
it is a great time.
I would be telling my clients right now to be calling their credit card companies if they have them and telling them to lower their APR. I would be doing that.
Yeah.
Yep. Man, that's some great advice. Great advice. And I think it's also important to note that rates are still at a somewhat historically low rate. I think that we've ridden this roller coaster of rates, right? Where, we've had conversations where, you lock in one rate at the beginning of the day, and by the afternoon, that's completely, different. And so, yes, they're very volatile right now, but at the same time, they are still historically lower than they were prior to all of this happening. So just because this is happening doesn't mean this isn't a good time to reach out to your lender. It doesn't mean it isn't a good time to reach out to your realtor, right? Now is the time when you're sitting at home and you don't have anything to do, and Tony, correct me if I'm wrong, now is the time to be furthering along your shopping experience, right? And so, Tony, for all of my newer realtors out there, right, for some of the realtors who may be in the position you were in at the beginning of your career, where you felt like you came in and it was really strong, right? '05, I mean, that was when people could sell houses to anybody, and so I think that moving forward, some of our young realtors now are going to be going through that tight, market downtrend where they're not going to have as many houses to sell. What can they be doing to keep themselves relevant, to stay on top of their sphere? What are your people doing, to do that?
Yeah, you gotta do what others aren't willing to do. Is the simple way I always say it. And you guys just mentioned refinancing, and 2-3 weeks ago, my lead generation daily was, I was calling clients that I have a really good relationship with, and just letting them know that do you want to refinance right now? And they're like so confused in some levels of like, well, do you do loans now? I'm like, no, not at all. But I think it could be a good opportunity for your situation. And so I always say just add value to people. And what's that look like? It probably depends on the market. Like the refinance script I was doing the last 2 or 3 weeks was really something not relevant to me. And I wasn't pushing them to purchase, but I was having a conversation so they know that I have their best interest in mind. And that's what sets me apart.
Yeah, absolutely. And that's one of the things that I've always known about the Baroni team. I mean, from the day I started in my job, we knew Tony Baroni and we knew his social presence and, the way they do things. And you guys are very referral based as well, if I'm not mistaken, based on
We are.
conversations that we've had in the past. And so to
Yeah.
me, being referral based means you're staying on top of your sphere. You're staying on top of your people who care about you, and you're continuously getting their referrals from them. Which
Yeah.
is
So
important.
we just had a lot of urgency because we basically send out a newsletter. So we wanted to get that out. So the past 2 weeks we've hammered hard to get that done so we could hit the mail this week, and it actually gets mailed to people. And will they have enough time to read it right now? Hopefully, it'll sit in their mailbox, but they may actually read it, which would be cool. And we write all the articles ourselves, and in there we talk about refinancing. We're doing a giveaway tomorrow, which is, I think, just a good example of thinking outside the box. We're doing a $300 Amazon gift card. It was going to be a Disney World pass for 3 days, but we didn't think many people would call in for that, so we changed it. And we actually had to redo about half our newsletter in the past week before it hit the mail because so many things changed. We had a spring training article in there. We had an event article in there. So anyway, you just get stuff done, and we got it done. And then tomorrow from 9 to 5, you can call in to our number for our Tony Baroni team giveaway. We're doing a $300 Amazon gift card. And then when people call in, we're going to ask them how they're doing. And we had about 138 people call last month for our Valentine's Day dinner giveaway for Fleming Steakhouse. We set up the reservation on on Valentine's Day, and we had 138 people call in for that. And this time we're doing a $300 Amazon gift card. And, do different things that other people hopefully are not doing, and it adds value to people. And Amazon, we land some toilet paper right now, which would be awesome.
yeah, toilet paper. Are you pulling those out of your closings, or are you just throwing those into the contract for the house?
Well, that's our new closing gift. You guys didn't hear about that?
A roll of toilet paper. That's awesome. That's
a
so
hot
awesome.
commodity these days. Well,
Yeah,
I think
we're not skimping. We're doing a case of toilet paper. So
Charmin, is it that triple ply though? I don't want that single ply Scott. I need the
it's
soft.
double.
Okay,
Oh,
double ply. I'll take the double
this will
ply.
work, right?
Good stuff.
So,
Well, cool.
I mean, I think, so $1 million question here, obviously, right? Is, where Patrick and Mark, I mean, where do you guys think rates are going in the future?
If I knew, I would be a multi-millionaire.
$1 million question, right? I mean, because I got a call today, and then
It's a while.
one person was like, "Oh, I heard rates are going to be going down to 2.75%. Rates are going to hit rock bottom." So there's just a lot of confusion out there, and just your personal preference, right? I mean, because we utilize Barry Habib, and I mean, just what's your personal take on that?
Today, obviously people were a little frustrated with the way the market responded this morning, and then what happened with the unemployment numbers that came out. I think it was, correct me if I'm wrong, 3.3 million, or I believe it was something like
Yes.
that, to file for unemployment. That is substantial. That I think is probably the most in history over a short period of time. During the Great Recession, I think unemployment rate was between 20 to 25%. During the last recession that we had, I think it was around 10 to 12%. We were at 3.2 previously. That's going to go up. Some people think that could go up to 15%. So it's really hard to gauge rates right now due to the risk of unemployment, which that's the hardest thing, because what we've seen before, we could always just gauge the stock market based on the bond, and when one goes up, the other one goes down. And but now that's not even happening. Fed came in, did exactly what they were supposed to do, went in and made a commitment to buy mortgage-backed securities to help decrease our interest rates. However, there's still a risk factor there, which is why some lenders are pricing a little bit higher. And these warehouse lines and investors, this is a big deal for them. Some of these, just imagine if we had a lot of Americans that just could not afford to pay their mortgage in 1 month. I mean, that could really put a damper on many of these servicers and investors. So interest rates, they spiked up a little bit from yesterday. But we got to pay a close attention to the market to help educate our borrowers. But most important thing I would say to all buyers and borrowers when it comes to interest rates, stop. Okay, look at your payment. That's the most important thing. Do not play the market. If you're comfortable with a 3.375, do not hold off for a 3.25. As Mark said earlier, I saw something happen 2 weeks ago that I've never seen happen in my 15, 16, 17-year career. Interest rates literally dropped like almost 1.5 points, and then they went back up within a day. And the spike, it was crazy. And every loan officer in the country, they were freaking out because a lot of those buyers and a lot of those borrowers were floating that interest rate, or the loan officer couldn't get that lock in on time. And they said, "Oh, I'll do it tomorrow. Our interest rates are going to be a little bit less." And then they came out and boom, 4 or 5 reprices for the worst. So it's just a game that we do not want to play with.
Right.
And to the buyers and the borrowers out there, please just listen to your loan officer. We generally care about what we do, and we don't want you to be put into a situation where you cannot afford your mortgage. And the difference in payment on a $250,000 loan amount from a 3.5% to a 4.5% could definitely kill your deal. So lock in what you're comfortable with paying and move on.
Yeah, and I think it's important to note that exactly what you just said, if we do get to a situation where people are getting into mortgages they cannot afford, then we will have a situation like what happened in 2007, right? So that is what we want to try to keep from happening, and so that's great information. Lock them in now. If you're on the fence, just get off the fence. Now's not a time to be on the fence.
I tell my clients the same thing. So I'm glad you said that. And I always tell them this too. Someone told me in the last 30 years, the interest rate average was 10%. In the last 30 years, it was 10% on average. So, once you're comfortable with the payment, lock and load, guys. Lock and load, because I got lucky. I had just a vibe that, hey, I really need to do something. And we personally decided to refi and locked in at a 2.625, and it shot up the next day to another 0.5% or something like that per the loan officer. So yeah, if you feel comfortable, do it. And it affects affordability big time. 1% makes a huge difference.
Yeah, absolutely. So really, what I'd like to do now is direct you guys to each other. I mean, Tony, did you have any questions that you wanted to direct maybe to Patrick or Mark?
Yeah, one of them you guys asked, which I was curious to hear their input on So let's go a little different direction on it. Election years, you guys have been in the industry long enough. What's your take on an election year and then the year after from an interest rate perspective? What have you seen in the past?
I can take that, Mark. So when we're going into an election year, interest rates always usually drop down a little bit because it's, again, there's a lot of insecurity in the marketplace. The stock market kind of gets squirrely in who's being elected, right? They're trying to bet on that. So from what we've always seen, well, let's just say from what I've seen, is interest rates usually dip down a little bit during the election year and then start to rise a little bit after the election year.
Okay, that's what I was thinking too, if I remembered right. But obviously, I'm not a loan officer, so just wanted to know. And I think too, that's just something I'm always asking. I'm always asking the industry, what are you seeing? What are you guys seeing with appraisals now? Are you having any appraisal issues in general? Because obviously the market's pushed up, and now what do you see now with your appraisals?
I don't think that at this time we're not seeing any impact on value. That's probably something that may lag as we see a little bit of a dip in the market here. I think our bigger concern is just making sure that we can get the appraiser out there in a timely fashion and have access to the home. So I think it's more a matter of just maybe allotting a little bit more time for some of these third-party services like the appraiser, and make sure that we can get it back in time. Everybody can be comfortable and we can move on towards the closing.
Do you see less appraisers available?
So just to add on to what Mark said too. So what lenders are doing right now, their appraisal management companies are actually making the decision for traditional. It has to be a certain type of mortgage. Let's say conventional Fannie Mae, and if it's like just a standard purchase. And if the appraiser can't get out to the house, they can make the decision basically to drop it down to a drive-by, or in some cases even a desktop. So Freddie did give us some support there, some leeway, just in case we do have a situation where somebody does not want an appraiser inside their house, or the appraiser cannot go out and there's a shortage. So we did get some alternatives, if you will, from the investors.
That's awesome.
Yeah. Okay. Yeah, that was my next question. So you answered that. Just in general, if you see that happening yet, I know that was just announced. That was good news. If we needed the ability to do that, to be able to do a desktop underwrite, or I'm sorry, a desktop appraisal. So that's good stuff. I'm liking that.
Yeah. And then, Mark or Patrick, if you guys have anything for Tony, we'd love to see the meeting of the minds here.
Tony,
I had one more question.
Oh, yeah.
I had one more, if you don't mind, before we switch up. Just what's your guys' biggest challenges now as lenders?
I think that the key is because of it was already a busy housing market. We were saying that the spring housing market started early, and it has continued, and then now we add on the refinance activity. So everybody's busy, and our operations teammates are working as quickly as possible. So it really just takes a total buy-in here with our borrowers, our real estate partners, to make sure that we're all moving as quickly as possible. That when we need something, we need it quick. We need to make sure that we get you into underwriting quickly so that we can get you out and close on time. And so I think that's the key, is let's all work together knowing we have the same goal, and we work as quickly as possible.
Got it.
Yeah, I agree with Mark there. I think the ask for everyone, even the loan officers that I support, is just patience and understanding. Everybody is working very hard right now. Nobody is sitting on their hands, and we know that every transaction is important, And with realtors and loan officers, especially their transactions important, but we have a hundreds and thousands of transactions trying to close every month, and we're doing everything we can to get people to the closing table within a timely manner. So, and I think that the good professionals out there, like everybody on this call, I think everyone here has that patience and understanding. And then my job right now, literally, is jumping in the dugout, man, and making sure that loans are going through, helping loan officers with conditions, calling underwriters and discussing initial condition sheets and things like that. Just doing everything I can and going above and beyond to help loans in our community close within a timely manner. So I would just say, just what Mark said, patience and understanding. We're doing the best we can.
Yeah.
Yeah.
Absolutely.
Got it. Makes sense.
Cool.
Good.
Yeah, with Tony, I got just a question. Talking about the values, and that's one thing that I'm getting a lot. And you're going to know more than that, more about that than I would. There's some people that I've talked to, just buyers and some sellers, that fear that we're going to have a decline in values like we did in 2009, 2010. What is your projection on what we could see decrease or increase in the near future?
Okay. Yeah. So my best guess would be we'll have a lull in the market, meaning the next 30, 60, 90 days. And then that hose will be unkinked, and it's going to be an explosive summer and maybe late summer. And then from there, I think it's subject to what they do with interest rates. It's going to play a big factor. Being an election year, I believe that they're going to try to keep it as low as possible for as long as possible. And then unemployment, it's really completely different than the last time, you know. So I don't see it being the same, but I could see that definitely some challenges are ahead for us as an industry, a real estate industry. But nothing as crazy as before, where people were getting loans that shouldn't get loans, and they were getting turned down for rent, so they were going to buy. You know, I mean, there was some crazy stuff happened in the last market, right?
That's crazy.
So this one will be, you know, unemployment driven, and then depending on how much relief we get, will depend on how many get foreclosed and how many short sales. And you know, I was a short sale specialist before, so you know that's one thing I specialized in. So I think, you know, to our agents listening, it's, you know, find the market of opportunity right now, because think about what's getting hit hard, and then become the solution for that. And that would short sales, that was expired listings at one point in my career. I think there's a big opportunity for Airbnb right now. If you own 5, 6, 7 Airbnbs, we pretty much know they put 20% down to get the Airbnbs, and their income is zero right now. And take that times 5, 6, 7, 8, you know, they're probably going to need to sell, you know, if I had to guess, or they better have some deep pockets to withstand the next few months. So I am concerned from an unemployment standpoint. I have a team of 15 people. So, you know, my first day when all this happened, I took a stand and I said, listen, the last thing I want to do is anyone in this room to be concerned about their job. I want everyone to work hard and keep on. So then we can, in 30, 60, 90 days, we can look at each other and say, okay, we did everything right, because we already had a robust pipeline, right? But that's from 30, 60, 90 days before that. It's not from right now. So yesterday I led our team through the MLS stats. So I'll share it with you guys. Basically, pending new listings were 3,000 to 4,000 new pendings, 3,000 to 4,000 new listings. It was very robust. So the market's still really, really busy right now, even though it might not feel like it. Showings are way down, because I think certain sellers are just saying, I'm not comfortable with random people walking through my house. So, you know, we've made the changes ourselves, but there's going to be some deals that fall through in the short term, but it's much, much less than what I even thought it would be at this point, but that could change.
Yeah, absolutely.
So
Yeah,
that's a long answer.
That was an excellent
Yeah,
answer.
well, But I tell you what, man, people need to do life, and that's what I think we forget. Like people still need to do life, and right now
Yeah.
life is like God just pushed the pause button, and we got to remember once we're out of this, people still do life. There's going to be job relocations. There's going to be I think people right now are finding out like, oh man, I need a bigger house, right? I got to have an office. I don't even have an office in my house. I'm in the kitchen, right? My kids are outside playing right now, right?
Hey,
So,
Mark, I know a good realtor
Yeah.
if you need one for when all this is over.
What you need.
That's
Absolutely.
It's funny,
I think we'll all be ready to go out to
I
eat.
did-
I know there's a lot of complaining about all the cooking in the kitchen here right now. So
Yeah.
the restaurants will be busy
too many
too.
cooks in the kitchen. Yeah, too many cooks in the kitchen, right?
That's right.
Yeah,
Well,
so
cool.
I did a video yesterday, just to talk about things outside the box. Very stupid. It's actually just very dumb, but I do my dog where my dog talks, and I did it from my dog's perspective on what he thought of the coronavirus, and it was all positive stuff, because we're all here. The kids are given him more attention. He doesn't have to be, caged up ever. It's just funny. It's just
Yeah.
so try to think outside the box and put out content that's fun, and
Yes.
hopefully you
So
can
you
gain.
hit that. Hit content for a second. Content is so important, guys. I mean, that's where we're at. You're at home. You need to be on video. You need to be getting in front of your people. You need to be showing people your personality that they can't see because you're not in front of them personally, right? So if you have questions on content postings, obviously there's realtors around town. Tony Baroni's a great one if you need any of that, or if you want to reach out to us, Riki and I can help you out with that as well. Branding yourself. Now's the time to really be doing the things that you wish you had time to do when you started that you didn't do, right? So whether it's creating a brand, creating a following, getting on Facebook, getting on Instagram. I personally know realtors are actually pulling in leads off of Instagram. People who are just following them and saying, hey, I think Riki even does it. He's got people that just hit him up. Hey, I just want to get pre-approved on a loan. I mean, through Instagram. I mean, how much easier is that? So now's the time that you really need to create your brand, really create your following. And like I said, if you have questions at that, you can reach out to any of us in regards to that. Tony, so
Yeah.
what do you think is, really 2 or 3 things that every new realtor should really be doing every single day during this time of, self-quarantining?
Yeah, I think the first thing is you got to be consistent, stay on a schedule, right? So time block, as boring as it sounds, believe me, I don't want to either. But what do you do before real estate? So treat it just like a job. I have since day one. My whole team's on Zoom together, starting at 9 every day, and I go through. Not me every day. I actually have different team members dividing up training, and we're spending the time to do more training. We're celebrating things as a team. We all have bells, so we ring, and we're on Zoom together. So it's basically just like being in the office. So keep your schedule time blocked is the number one thing. Number two, I would say, is you've got to lead generate. And here's the script, guys. You want to hear the best script ever?
Yes.
Absolutely.
Okay. Okay. Ring, ring, ring. Hey, this is Tony Baroni with Keller Williams, and I was just calling to check in on you. I came across you on my phone, and I just want to check in. How are you doing? How's the family? And that's it. Like it's just staying in contact with people. Hopefully, we expect 200 people to call our office tomorrow, and we're going to be having great conversations. We're going to become the solutions to their problems any way we can. If they need a vendor, if they need anything we can add value to them, we're going to do tomorrow. And we're doing that daily anyway, but we're trying to get more people to call us versus us calling all of them. And that's what the Tony Baroni team giveaway is helping people out and at the same time try to add some value to their lives any way we can.
That's awesome. Yeah.
Yeah, I think Tony hit it on the head there with that wonderful reenactment of his phone call. It's not about selling people something right now. It's about showing that you care, showing that you're thinking about them, and building a connection that is bigger than just a sale.
Yep.
And we all have time to reach out to those that we want to spend time with, and be out there, be top of mind, and show empathy and understanding.
I agree.
Yeah, absolutely.
Definitely agree.
I mean, I love all of the content and the information we got in here. I think that, we couldn't have asked for a better panel. So thank you so much, Tony, Mark, and Patrick. We're super happy to have you guys on. Andy, do we have anybody? So for you guys who don't know, Andy is our behind the scenes guy. Say hello, Andy.
Hello, Andy.
That is Andy Blada with 6-2 Media. You'll see his logo down there on the bottom. He came through and set all this up for us. Andy, do we have anybody who has submitted any questions through the live feed?
Not seen any questions yet, but I got a couple questions myself.
Yeah.
For all three of you, how is this put thing? First, how long have you been quarantined? Are you quarantined? If you are, how long?
For me, since
wanna
last
start?
Monday, I think.
Last Monday.
Yeah, I think.
Last Monday?
was
You
it
haven't
last
left your
Monday?
house
Yeah.
since last Monday?
Well, I had the essentials, right?
Right.
Beer.
You are
Read into that.
beer and Benadryl, right?
Those who know me know how I roll, right? This is water. This is water, by the
Oh,
way.
I'm sure. I'm sure.
There you go.
What about you, Mark? How long have you been at home?
We've been practicing social distancing coming on, probably almost 2 weeks tomorrow. And I will say that we've really have been here at home. I've been the designated, go to the grocery store and get those essentials.
You wear your
so
Tyvek
I've been
suit
out
when
and
you
about
go?
just as necessary. What's that?
You say you wear your Tyvek hazmat suit when you go, put the whole thing on, put the respirator on?
No, but I can tell you, my wife makes sure that she sticks a little baggie worth of Clorox wipes in my pocket as I'm heading out the door, and tells me to make sure I take every precaution, and then make sure I wipe myself back down when we get home. So
That's right, man.
That's
good.
We're doing everything we need to do.
Yeah, I hear you. Tony, you been home for a while, or are you still out and about? What are you guys doing?
Actually, late last week, our office, there wasn't a lot of people there, so we were able to do the social distancing thing within our office, but then had made the decision just to go home because we knew it was probably going to come to that at some point, and we wanted to get set up and make sure we didn't skip a beat for our clients with all the contracts we had going on. So we made the decision late last week.
Cool. And I'm actually glad Andy brought that up because everybody's probably wondering how we're talking about social distancing, but Riki and I are sitting about
6 inches.
6 inches apart.
Yeah.
So this is actually the only person that I have pretty much quarantined myself with is him and his wife and me and my wife. And so they're pretty much at our house every day, or we go over there, and that's it. And so yes, we are practicing social distancing. I just figured, because we saw each other so much, if he had it, I already got it. So it's just kind of that simple. But I'm right.
Well, that's how we did in our office. Same deal. Like, we're all been around each other so much that
Right.
yeah, it's funny. Like, there's a person on our team that she's been showing clients like every day, but it's clients that she's been working with for a long time. So she's like, believe me, if he has it or she has it, I already have it. So I'm going to go ahead and finish it up. And that's just how she feels about it, which obviously is a personal choice.
Right. Yeah, the mission must go on. Yeah, that was a great question, Andy. Thank you so much.
Well, I got another one for you, too.
Yeah. Go ahead.
When this is all over, how will, all the things you've learned being quarantined, having to do things remotely, how is this going to help you when this is all over? How is this going to make you better at what you do?
That's a great question.
Oh, let me jump in and tell you. And I've been telling people this, and it's the truth. Harvard could not teach you how to do this right now. This you only get this type of experience if you're living it, if you're actually doing it. So I talked about again earlier, just adapting and overcoming. There's no better education right now for a realtor, for a loan officer, a title rep, or MI company, or inspector, appraiser. This is the best education that we can receive as professionals.
Yes. Man, that was nailed right there. Boom. That's perfect. We actually had a very similar conversation to that where we just felt like, this is our chance. This is our chance to go through something difficult and to really tighten up, some of our processes and procedures, because somebody said something to me a long time. It was a good friend of mine, a mentor of mine. He said, when motivation fails, processes and habits take over, right? So when your motivation, your excitement for everything that's going on dissipates, then it's your habits and your processes that you have in place that you fall back onto. And so I think that this is the perfect time to really tighten those up, right? And to come up with better processes and to come up with better habits so that when we get out of this, we're still doing these things on the back end. Because everything you're doing right now, like you just said, Patrick, is 100% going to correlate to the market afterwards, right? Building relationships digitally. We've been pushing this for so long, you know what I mean? But now people have to do it, So I think that was a great question, Andy, and Patrick, I think you nailed it.
Buy your stock now.
That's right. That's right, guys. Well, thank you so much for being on the show. I really, really appreciate it. And this is, like I said, our first episode. We had some brilliant minds on here today. Riki, did you have anything else for everybody?
Yeah, I'm good.
All right. Well, thank you for joining us on the first episode of the Briefing Room, guys. Thank you so much.
I appreciate you guys.
Fantastic job.
Thanks, guys.
Thanks, guys.
Thanks.
All right.
Thank you all.
This was fun. Thank you.
Yeah.
Appreciate
sir.
the opportunity.
Yes, sir.
Yes,
Thank you.
Tony,
Thanks, guys.